I think it's a culmination of the work we've been doing over the last few years of reinvesting in our brands, reinvigorating them, making them relevant for the consumers, and with our new network of refranchised bottlers executing the marketplace. And it's allowed us to be, over the last number of quarters, hitting our long-term growth models, including a creditable 6% in this most recent quarter.
What about the macro environment, though? On the other side, it's gotten tougher. You're dealing with a stronger dollar, emerging markets issues. Can you describe what you're seeing out there?
Yeah, I think there's clearly, as we've gone through the year, the headwinds have got a little tougher. The macros around the world are perhaps softening a little, particularly in some of the emerging markets and coming into Q3. And we've seen that affect us in the exchange rate. Obviously, being in over 200 countries, we're bringing money from around the world back into US dollars. And that's gone against expectations and turned into more of a headwind coming into the second half of this year. So macro's weighing a little on us, but the underlying operating performance has allowed us to stay on our guidance for the full year and deliver a strong result in the third quarter.
Yeah, I think that was an important point for investors. What about North America? The U.S., James, actually was not as strong as the rest of the world with 2% growth. Thought the consumer here was doing great.
The business in the U.S. is doing well. There are a number of accounting adjustments that are going on this year in our U.S. business that have a mechanical effect of reducing the apparent level of pricing and the revenue growth in North America. When you look at what's happening in the marketplace, our business continues to be vibrant across many categories and across many channels. So we're still growing. We like our strategy of reinvesting for the consumer, growing value for our customers, working with our bottlers. It's working. There are parts of, and there are segments in the U.S. markets where you see a little bit of strain. But overall, I think the dynamic is good, and we continue to execute against our strategy and push ahead.
Inflation has been a really big theme on quarterly conference calls. You talked about it last time, said you were going to pass on higher prices to the consumer as a result of the aluminum tariffs and all the other cost pressures you're facing. How's that going? Are consumers willing to pay up?
Yeah, I mean, we've had to pass on increases in input costs around the world to the consumers. Clearly, what we focus on is trying to not just make it about the price on its own. We try and bring some innovation in the packaging, whether it's more interesting, more premium, or actually trying to make the packaging more affordable so that we can adapt the changes in input costs and really provide a bundle of things to the consumer that really continues to engage them. And I think that's what's allowed us to continue to grow volumes, even though we've had to pass through some of the input costs into price, because we're providing something that's interesting for the consumers.